This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you daily with short business episodes, short private equity episodes, interviews with brilliant leaders in private equity and business, and sometimes short, irreverent episodes. Today's a discussion with a private equity leader, like lawyer, chair of the healthcare department at McGuireWoods, Holly Buckley. I'm going to tee this up for Holly. There's sort of four transaction trends we've been watching in healthcare private equity, and they're sort of as follows. One, provider and bolt-on transactions have slowed a lot or stay relatively slow over the last year as the combination of margin pressure and higher interest rates leads platforms to be a little bit more cautious in their acquisition of bolt-ons and practice transactions. Second, the biotech area has largely recovered, very busy compared to a few years ago when there was a serious drought there. Third, the medical device world also remains quite busy as part of the overall healthcare sector. Sort of the life sciences part of healthcare seems quite busy. Fourth, revenue cycle transactions, revenue cycle companies, sort of aggregations continue to gain steam as people try and figure out revenue cycle, which is a huge part of the healthcare ecosystem, and a lot of dollars flow through revenue cycle. Holly, let me ask you for your comments on those four observations. What are you seeing out there, whether it's in the life sciences area or the practice area?
Yeah, thank you. And I think your observations are very accurate in terms of what I'm seeing as well. Certainly on the provider side, transactions have slowed both in terms of the bigger deals and the roll-up deals. I think in addition to the margin pressure and interest rates, there's also kind of what we would call the government headwinds, which are the increasing attempts by both state and federal governments to put additional both notices and also restraints on some of these transactions. And I think all of these things combined have created a slower deal climate. There was actually an interesting article yesterday in Forbes talking, the title is Private Equity a Villain in Healthcare? And then it kind of takes the counterpoint in terms of why private equity isn't the villain, that in fact it's generally good for healthcare. And it's some of the reasons that we've talked about before in terms of the potential for improvement within the space, needing funding and capital to do that. And the incentives are actually relatively well aligned for those improvements. But I think nonetheless, the headwinds have created a slowdown in deals. And I don't think we're ever going to get back to the deal volumes that we saw in 2021 and thereabouts. I also agree on 2 and 3 in terms of biotech and medical device. We're certainly seeing a lot of activity in this space, and I think a lot of funds who either were solely focused on provider side or were kind of more diversified are certainly spending more time and energy in these sectors because it's a little bit safer. There's less headwinds, and we are seeing a lot of activity there, and certainly consider life sciences as a growth area for us in the deal attorney space. And then finally, in terms of revenue cycle, I fully agree. I had no idea there were so many revenue cycle companies out there, but I think with some of the activity with the big players such as Change Healthcare, I think there's a lot of interest in the smaller players and the niche players. And we're seeing across our desks a number of revenue cycle deals at any given point in time. And I think it's just fascinating how those have kind of become the in vogue deals of 2024.
Good, thank you. One other question. What are you seeing with digital health, digital technology? I can't tell if there's a lot of deals going on or a lot of noise in the world today compared to a couple of years ago. Any sense of what you're seeing there?
I would say yes, that there are deals happening, but I think it has to be combined with, or generally they're combined with something else. And so, for example, we're seeing a lot of interest right now in digital health platforms that sit over kind of GLP-1 drugs, digital health deals that sit over some kind of value-based care platform. So it's not just blanket automation, it's very much kind of automating some kind of other hot area. And so those tend to be the deals that we're seeing. And then you just get into the same challenges with all digital health deals, which is, are they revenue positive, and how far along are they? What's the customer base? What's competition like? And it's just a tough area, but we are seeing deals in this space.
Thank you very much. And any place else that you're seeing more activity or less activity that comes top of mind to you that you're seeing more or less?
We're still seeing a lot of activity in the med spa space. I tend to live in the provider world, so I tend to see a lot more of the trends in that area. So definitely med spa. We're still seeing activity in the cardiology sector. And yeah, I mean, infusion is another area that we're seeing a lot of interest and a lot of folks try to get involved with. And there's just a huge mix of platforms that are out there. And then also companies like Infusion that are adding ancillaries to existing provider side businesses. Those are the ones that I'm seeing the most volume in right now.
Thank you very, very much. So you got the infusion therapy businesses, the spa businesses that are often consumer pay versus payer pay. I know there's some stuff going on in payer services as well. Again, Holly Buckley with us today. Holly, thank you again for joining us on the Becker Private Equity and Business Podcast.
Thank you.